I'm a true believer that the reason Ethereum has rallied, I mean, if you look at the rally, it was up over 100% off of the lows. My guess is a chunk of that gain was due to the excitement of the merge. My fear is that it's going to be a sell the news event. It's going to happen. Yes, it's a good thing for Ethereum, but I don't necessarily know if it's a short-term continued catalyst. So my guess is I think you could get some bounces here, but I wouldn't be surprised if you have to go at least retest 1250 down here, which would be major support before it has a chance to kind of withstand the selling pressure that the U.S. markets are likely to exude. So I'm in that camp where I still think there's a little bit more downside. I still think Bitcoin has further downside, and therefore by default probably Ethereum. Yeah. So for me, I'd have to wait. Anytime something rallies as much as the Ethereum chart has rallied, I would be too scared or too nervous to jump in at this minor of a pullback. I mean, we're basically down 30% or so off of those highs maybe, but it's not a huge correction. Usually what you'll see is after you have such a big bear market drop in Ethereum, and again, if we go back, this was trading near 5,000, it went to 875 or so before this bounce back. Usually you'll get a check back. So my line in the sand for me would be this little pivot right down here. You can see it's a two kind of pivot top right there and right there. And that would be your spot where if you flushed into it around 1260, 1250, that would be where a short-term long could be initiated for a bounce, a pretty significant bounce back up. I think the CPI will continue to move a little bit lower or will grind a little bit lower. I think, again, you're seeing how the producer price index side was the leading indicator for the consumer prices, right? So we saw very early on that the producers, the people that manufacture, the companies that manufacture, their inflation was starting to kind of come down a little bit. That should get passed to the consumer a little bit as well. My biggest fear, and I think we talked about this a couple weeks ago, is that I think everyone's expecting it to go to 2% or below, like the Fed says. I don't think it does that, and I think that's your big issue later in the year. So later in the year, early 2023, the market starts to realize that inflation's stuck at 4 or 5% per year. And when we get to a point, whether it's this year, the next year, the year after that, when you have a recession, we know that recessions are inevitable. How does the Fed get us out of that this time when they can't print money? And that's the scary thing. And I think that's where, whatever that is, that's where you see the bottom in Bitcoin, where Bitcoin finally starts to turn back up and say, okay, now we have a new scenario. The Fed's not bailing us out, inflation's not coming down. Buy something like a Bitcoin, continue to accumulate gold. For me, at least when it comes to Bitcoin, I think that Bitcoin still has a small chance to make one more push up. It almost seems too easy. And I'm a kind of a contrarian trader where, we've broken down the Bitcoin chart, never really had a big spike that got everyone on board on the bullish side. A lot of people were bullish, but not to the extent that usually signals a reversal in trend. So I am kind of curious if we see that. And I agree. I mean, if you look at Bitcoin's price today, it's only down a little bit. In fact, the equity markets are down percentage-wise more than Bitcoin, which is somewhat on the rarer side, especially when the dollar is as strong as it is. So I don't know if we can look at that right now and say, oh, that's actually a strong indicator for Bitcoin, but it very well could signal maybe a little bit of upside still left in Bitcoin's tank before it finally rolls over. So I think it's important to understand, I'm not debating whether or not Bitcoin's going to go lower. I do believe it does. The question is when. And that's going to be key here. Do we get one more push up, retest 25, maybe get to 28, or is it done now and just kind of going to that 12 to 13,000 range? The Fed minutes that came out last week, the market was a little shocked the Fed wasn't more dovish. They seemed very, very hawkish, and that's really where we topped out in the equity market. So we've seen that pull back now. We've two pretty big sharp down days, Friday and today. And now the question is, again, where do we go? So I think for Bitcoin itself, Bitcoin is kind of trying to figure that out as well. And in fact, we can go to the Bitcoin chart here. Let me bring that up so we can take a look. But basically, we broke down below this channel. So this was a bearish kind of channel, perfectly parallel lower line and upper line. And you can see on Friday when we had the big market sell-off, it did break. So that's a little bit of a concern. It's not the end-all be-all though, because you're still holding above the 2017 highs. So this is going to be a big test now for Bitcoin. Does Bitcoin come down? Does it tag it and bounce? or do we start to break lower? And again, for that, you have to look at the DXY, the dollar. I think the dollar is hugely important here. The dollar has been screaming to the upside. I do have it penciled in that we have a nice double top here, so I expect a pullback in the dollar, and that may save Bitcoin in the near term.
If we hold the dollar right now at where it has been charting, how does this play out for Bitcoin? Because you mentioned that it may save Bitcoin on this little bit of a downtrend that we're seeing right now. Where would you call the top right here where the dollar is trending right now?
Yeah, so I mean, you're literally where we were on the dollar on June 13th or so, June 14th. And so that would be a double top. And then I like to go to my weekly chart and zoom out a little bit. And I still think that for the dollar to only have pulled back as much as it did and then retest and break out, it doesn't seem likely because these two trend lines are so powerful. So if anything, I'm looking at this as more of a double top, at least in the near term, that should push the dollar back down. Now you might say, well, what's the catalyst for the dollar to pull back? Well, what about the jobs number coming not this Friday, I believe, but next Friday? I think that's going to be a big one because we know the jobs number is a lagging indicator, or at least a lagging indicator, right? So we know that some of the economic data is already kind of weakening, but the jobs data has been so strong that everyone's saying, oh, well, the Fed has to keep tightening because they can with the jobs data.
Right.
But if you see some weakness in that jobs data, it's all of a sudden going to put the Fed in a much different position, and that will likely weaken the dollar quite a bit. So Ethereum is one of the trickier charts for me to analyze, mainly because of the curveball of the merge and how that affects price. I mean, just to be fair, there's always chances of small overshoots. So is it possible we could pierce that double top for a couple days, a week? Yes, but I don't think it's going to last because, again, everything I'm seeing is showing a weakening economy. I'm noticing retailers are starting to show. We've seen a lot of retailers reporting earnings. We did see Walmart rally, but then Target fell sharply on their report. And again, we're seeing more and more weakness coming out. And I do think that jobs number will kind of showcase that there is weakening going on. And people will start saying, okay, maybe the Fed in September hikes 25 basis points, but it's probably not going to be 50 or 75. And then the question is, by November, December, is it even worth the Fed hiking anymore without pushing us into a steep recession? And I think this is what the Fed's going to have to deal with too, right? Is that without inflation back below 2%, they have to be so careful not to push us into recession because what can they do? I mean, if they put us in a tailspin, they can't bail us out again with printing of money unless inflation is down to 2%, which it is absolutely not going back to for a long, long time. I think the Fed still will want to do something. I don't think the jobs data will be super weak. It'll be weaker, but not weak enough. And I think that they're going to want to just kind of end it. I don't think they want it to look like they were panicking with 75 and then zero. Like, oh my goodness, it's getting so bad that we can't do any more, so we have to stop after 75. So I think they'll kind of bring it in for what they think is a soft landing at 25 and then taper that to zero, obviously, going forward. So that would be my expectation.